Mr. Ben Haught.
Hey, Eddie.
How you doing?
Doing great. Glad to be here.
So Ben and I met around 2008, I believe it was.
Yes, sir.
And you were trying to reinvent yourself. And you had been a traditional real estate investor, and you and I had a mutual friend. Actually, this guy had really been a mentor to you.
Mm-hmm. Yes, sir.
And had a mutual friend, guy lived here in Dallas, Fort Worth, and he says, "Man, you got to meet this old buddy of mine, this old Southern talking guy named Eddie Speed." And so that led us to a long relationship together. So those of you that don't know this, Ben has really two business fronts, and one of which is he helps NoteSchool, and I'm grateful for that. He and I've been to literally hundreds of events together. And Ben does a great job of helping us at NoteSchool in what we call the liaison and the really the onboarding side. Like if somebody wanted to be a student, what does that look like? Mm-hmm. But the good news is they are learning from somebody that has a really successful part-time business in buying notes and raising assets. In fact, no trickery. Ben is an award-winning student.
That's right.
Ben has bought more assets, I believe 2 years. Mm-hmm. For 2 different years, Ben has bought more assets than any student in NoteSchool. So that's pretty impressive, Benny.
Yeah, Justin beat me last year. I was trying to go for the 3, but he beat me. Fair and square.
Yeah, we've had Justin Bogart on here. Good dude. So Ben, how do you do this magic, man? How do you do this?
Well, it fell in my lap. Actually, what's really funny is that, as you know, and others that may not, when I first started, I was just doing this by myself. I had no inclination to go out there and kind of raise capital or to really even tell people what I was doing. And it just kind of fell in my lap where, as Brian alluded to, I went to see a doctor who I've known pretty much my entire life. And he asked that question that people ask, "Hey, what are you doing?" or something to that effect. And that's really what opened the door. And the first time I was asked that, it was bad, Eddie. It was really, really bad. I stumbled through it because I was just caught off guard by the statement. And after I thought about it, I was like, you know what? People, they do ask you that. They do ask you what's going on. And so I came up with all this thing and kind of went through that process, but refined it over the years. And that's really what kind of led to the side job of Hammelmeyer. So it was an interesting ride for sure.
So you went to the doctor, you're getting like a checkup or something, right?
Yeah. It's just regular checkup.
And so, the guy's got you looking up in the air or whatever it is you do at a checkup, right? Hold your elbow up.
Yeah.
And he says, "Well, what are you doing?" And you said, I'm not doing rental property anymore. I'm owning notes, right? I'm the bank.
Yeah. It's pretty much a short condensed version. Yeah. I just told him, hey, it had to look at what happened in 2008. He expressed the same thing because he was investing on the side as well. And what really kind of led into it was just a man, all those rentals and the rehabs and, so on and so forth that I was involved with. He's like, I'm involved in heavily on the rental side. I was like, really? And so that's what led into it. And that's what he was like, well, what is it exactly that you do? And they just kind of told him, I said, something to obviously it was 4 years ago, 5 years ago, whatever it was, but something to the effect of, well, it's like owning a rental, but without all the traditional headaches, and you get more money every month. And that obviously intrigued him. And and then that's what it was. I, again, stumbled through it the first time. And but then having those conversations, what's really funny is that people who are familiar with that Hammelmeyer know that we turned 4 years old on November 17th this year. And we've never had a marketing budget. It's all been word of mouth. And so it's just one of those things where I went in and it seems like doctors always hang out with each other. And he just kind of told one and he told another, and it just spread like wildfire, and really kind of, and it's even more so applicable now in today's market, I think, just based off of everything that's been happening. I think it would even go even further faster with it. So it's not always about marketing budget necessarily. Obviously, marketing helps push it much faster, but you don't have to necessarily. Yeah.
So you're essentially dealing, you found a doctor who was actually your doctor.
Mm-hmm.
The conversation started, what are you doing?
Mm-hmm.
I've got something that's easier than rentals and I get paid better than rentals.
Mm-hmm.
The doctor goes, what?
Yep.
Right. And then he then introduced you to several other doctors. Now you guys own a company together now. That's not how you started.
Mm-mm.
But you guys actually own a company together. It is called Hammelmeyer.
Right.
Just some kind of funny name you thought up. There's nobody named Hammelmeyer, right?
No, it was long, funny story about it, but yeah, there's nobody Hammelmeyer that's related to the company. No.
Yeah. But that's the name of the company. And so you essentially, you're paid to manage the company.
Mm-hmm.
And you're also paid every time you buy a deal. So you make money today.
Mm-hmm.
Because you get paid every time you buy a deal.
Yes, sir.
Right? They pay you an acquisition fee.
Yes, sir.
Now you did that and you were getting paid up front when you were just selling one-off notes before you formed the company, right?
Correct. Yeah, that's actually how we started out. Where when I was talking to Dr. Steve, was saying, hey, here's what I do and here's what's going on. And as that conversation progressed, and he was ready to really start getting involved, he bought a package of 7 total, 5 performing, 2 non. And that's kind of what started it. And so, every now and then I get somebody who teases me. I think they're teasing me saying, well, it's just because Dr. Steve, and that was easy. I said, yeah, but the other 8 I had never met before. And so it's not like you have to know somebody in order to do it. It's really the art, as you call it, the talk off, right? It's the way you present it. And things of that nature. So when I first started, not to deviate too far, but when I first started, it was just, hey, here's what's going on. Here's the math. Here's how it works out, and things of that. When the math kind of spoke for itself, and that's really what hooked him, because he realized how much he was losing every month by being involved. Not only the headaches and but just the math that he was losing. So.
All right, so you sold him first a portfolio of notes. That's a little unusual. You sold him a portfolio, not one note.
No.
But so, do you have any recollection how much you made on it, that deal, when you closed it?
It was around 20 grand ish. I mean, we're ballparking here, but he had. I do remember the deal because it's funny how people always say, oh, I have X amount to work with, right? And it's always less really than what they really have. It's kind of one of those things where I tease, it's kind of like seed and harvest, right? You plant that little seed, but the harvest that one plant's going to produce big time. And I'm a huge believer in this rule of seed and harvest in life, right? And so he said, Ben, I have up to 500 grand. And I went in the back of my head, I didn't show it on my face, but in the back of my head, I went 500 grand. And that's his starting number. And so, but that's what the impact, it wasn't the 500 grand. The impact that it had on me was just having that small conversation and showing him the math, the impact of his pain or his hurt or whatever we want to call it. Right. He definitely realized that the math that was there on that side he's like, man, I'm not going to get to where I want to get to as fast by keeping with the model that we're there. The rental model is what I'm getting at. I don't want to kind of make it seem where he was destitute. He certainly wasn't. He just had a goal in mind where he wanted to retire and retire at a certain age. And he was very aggressive and wanted to hit that goal. So that's kind of what started the whole process.
And he was aggravated with landlord.
Extremely. Yeah. Yeah. That was a big pain point of his. It's just the constant calls, stopped up, the typical tease everybody kind of deals with. It had just run his course. He had a sizable rental portfolio, but that's what he as you and I have had this discussion often, it's just what people know. They don't know about notes. They're just told, oh, go get a bunch of rentals and that'll take care of your cash flow. So
it's kind of like if you were at the airport and people were waiting to catch a flight, you say, how many of you own a rent house? And maybe a third of the people sitting at the airport own a rent house. And they say, how many of you own a mortgage? And you're like the bank and you collect payments every month without managing a rental. There wouldn't be that many people raise their hand, would they?
Right.
So Ben, I'm curious, so when you first started out, what did that conversation look like? How did you, what was he asking you? Where did you go with it?
Well, the original conversations, I'm going to lump a few of them together because I think there's a lot of teaching points in them. One of the first things that I hear people ask, because it's a little bit far reaching, but impactful to people who may be listening, is most people have not done a lot of deals prior, right? And so they're hesitant. And I think that's where it comes from, is they say, well, Ben, I haven't really done a deal, or Eddie, I don't have a lot of deals in my back pocket. And one thing I learned early on was that even though I had done a few deals at this point, it wasn't many, but it was a few of them. When I started, I would always say, here's what I do. Here's what I can do for you. Here's what and it was I statements. All I did was and they were always asked, well, how many deals have you done? And all the different questions that people have concerns about, right? How many deals have you done? Well, how much do you have in it? Well, how much? And it's back on you, right? Mm-hmm. Well, when I switched it to here's what you will get, here's what your journey will look like, here's what it's all about you. Not one time, Eddie, not one time to my recollection was I ever asked after changing that statement, how many notes do you have? How many do you have? Or how much money do you have in it? They got it, and what's funny is on the backside now, where, I'm not a braggadocious person by any means, but now when you could brag about it, you never get asked the question. So it's just making that one little statement of changing the eyes. Here's what I can do, but here's what you will get. It made a big difference. I mean, it was so much easier to present the note space in general, just to doing it. And so that conversation of really saying, what is it that you're involved with? The point A, I know this is cliche, but point A to point B of here's what notes can do for you. That was really the genesis even of the note versus series. It was, here's what you're familiar with, but here's how notes can really give you more and solve more of your issues where you don't have all those issues coming in. And so that was really the conversation. And it did evolve over time as we mastered the talk off, and just became a whole lot easier to present, to where now it's second hat. I'm almost over through the conversation at the beginning before I realize, oh, wait, we just went through it. So it definitely becomes easier.
Yeah, this is something we've done a lot, right?
Mm-hmm.
And so now we've kind of figured out what to do. And I think this has been a big part of what we can do is help somebody with that.
I have a question for you, Eddie. Now, because I'm always curious myself, I always like to ask you a lot of questions, but you've been doing this for a while. So does that conversation evolve at all when dealing on a bigger portfolio? Does the conversation change? Is it still kind of been, that's the same whether you're talking about one asset or a portfolio or a pool?
I think when you now start talking about a portfolio, you probably have progressed past the one-off conversation. So if we buy 50 of these, Ben, then we're spreading our risk over 50 deals, and we just. And the other thing is I think it's important that they know that in your case that you're running a back office for them, so that you're not selling them one-off note anymore in this group. But you gave a number. Your first portfolio was about 20 grand. I know that you have told me there's months that you've made 40 grand upfront money.
Yep.
But that's not all the money in the deal. you're earning 10% of the profit in this business. And you guys now own several $1 million in notes you're collecting income on. That seems like pretty good residual money too.
Yeah. I mean, it works.
I mean, I'm not that good with a calculator, but my calculator tells me you're going to be okay.
It's enough. Yeah.
So I want to talk about what were some of the what was the conversation when they started, and how did you have to overcome it? Like, what did it take to get a check out of them, Ben?
Great question. What's funny is that I think the original objections were more in the mindset of like they would ask. I don't want to put them in a negative box or whatever, but they would ask questions where they were trying to look more sophisticated than what they really were. And I think it was just a way for them to feel comfortable that they vetted the process, right? They would ask, questions that you and, especially you, but you and I would think, well, that's not relevant to what you're really asking. But to them, it's the highest level of sophistication of investing that they've been involved with. Mm-hmm. And so one of the earliest things you and I kind of tease a little bit, me probably more so, is that the whole ROI versus yield, right? Mm-hmm. And they're stuck on that, and they want to present themselves like, oh, I know what I'm talking about, and I can run the math. I'm like, well, let's run that yield, and it's complete, like they don't know how to do it. And so I think a lot of the beginning aspect of the conversations was just kind of finding out, okay, and again, without sounding like this is about sound, I don't really necessarily care about the resume. You've done well, clearly. You've done, what you've done because you have what you have, right? But we don't want to diminish that, but we all want to do better, or we should all want to do better. And that was really the conversation of shifting it from letting them kind of go through their, what I call resume, teasingly. I really am being kind of teasing about it, but let them go through their resume and then say, okay, I hear what you're saying. What is it that you really want though? Why did you get all that? What's the purpose? And then kind of shifting that over to kind of the conversation of overcoming their really expectations. Because a lot of them, I know we live in an on-demand society. I get it, the selfies, we kind of, self-propagate that, I think. But so everybody wants it quick. They want the immediate, lottery winning. And so I said, this is not that. I mean, we're making a lot over time, but you have to understand it's not like you put in, it's not, like kind of using a stock market analogy. You're not putting in $100. You're having your huge, you make $1 million overnight, right? That's not what this is. You can make a lot of money very quick, but it's not get rich quick, as you say it much more eloquently, but that's the conversation that I have with them. And so it was more of a, just what would you call it? A morphing of the conversation. And so, one of the things, again, asking, I know I don't keep coming back to you, but one of the things I am very curious about is, do expectations change the more sophisticated an investor comes? Like you're dealing with a little bit more higher sophisticated individuals just being in the investment field for so long. Do they ever kind of morph or shift, or does that kind of stay consistent? I think that's a good question to ask.
We worry so much about getting interrogated by investors, right? We're worrying about them asking us if Ben, you and I are pretty seasoned, right? But we weren't always seasoned. We started out being not seasoned, right? And we're always worried about being asked like really interrogating questions, and passive investors don't ask interrogating questions. Passive investors want to know that they don't necessarily think they have to know everything. Not that you're hiding anything from them, but I just have learned that, I had a guy in my office yesterday, very sophisticated guy, and he made a statement, I've been unable to raise money outside of my market. And I laughed and I said, we buy assets all across the United States. And I found that true passive investors don't really care about where the asset is. They care that I care but as long as they think I'm good, they're good. And, and it's funny, he retracted his statement. He said, you know what, Eddie, you're right. He said that is true. He said, I may build a barrier in my own head that doesn't exist. And I said, possibly, so the bottom line is, Ben, I think a big factor in the deal is, that these investors are just having a conversation. They're not like, you're right. They may, like somebody may get in there and start for a little bit, for a sentence or two. They may like try to, ask me questions that are deep dives, but it always ends up like this. So, Eddie, do you believe in this? Is this something that you would do? And I always tell the truth, right? If I wouldn't put my money in a deal, I wouldn't put an investor's money in a deal. That is an absolute true statement. So I can say with integrity, this is something I'd put my mother-in-law in, and because I have employed a lot of money for my mother-in-law, so I can say that with integrity. I put my mother-in-law in this deal, and she's my second mom. No kidding.